Good morning, everybody. 11:30 a.m. It's never at 11:30 a.m. It's the same time every weekend, Patrick Swayze, and you know that. How's everyone doing? One second. This is the first time I've ever been on time. Yeah, everyone's nervous about their cover calls. Good morning. I'm doing all right, Bruce Wayne. How are you? Hey, everybody. Happy weekend. And Halloween tomorrow. Halloween's tomorrow. FOMO is the only run indicator. Changed my mind. I mean, FOMO didn't do a hell of a lot on Friday. It pushed us up a little bit, but we didn't break through their put wall. They held the line, right? All of that FOMO, and they held the line like it was nothing. It's I don't do the audio on the weekends on Discord. Good morning, Girk. Wins by 4:30. We're gonna have a lot of fun stuff to talk about today, I think. When does SPX settle at the bell? SPXW does. Pull, put call spreads, and how and when they settle strats around those. Thanks for 15 months. Thanks, Sir David P. Yeah, SPXWs, I believe, settle at the bell or at like 5 o'clock. It's like right around there, but you want to close your positions before the end of the day. Or they just cash settle. I mean, if you have the money in your account, it's not a big deal. I've been having an alright weekend. Thanks, Dominic. How you been, man? Well, I guess we'll start the day off with GME because that's the one everyone's got all the questions about, right? So GME, as you are all well aware, has a little bit of FOMO going on right now with the announcement from like S3 partners and hype created by what I can only assume is atrocious Ortex data. The problem being there is a massive amount of negative gamma on the options chain between well, about the price we're at now and $30. After $30, gamma's fairly flat. There's some negative ranges, but they're small to the upside. So yeah, if Jimmy were to break $30, it has quite a bit of room to run, right? At least until gamma expands sufficiently for the longs to no longer position up. What does this mean for this week? It's hard to say. We don't have the updated OI yet. But I would say that pressure will probably continue into this coming week. So we do have ETF FTDs coming up. Here, I'll mark the window for everyone. So ETF FTDs are going to be occurring between November 3rd and the 10th. So this window here is going to be our ETF FTDs. We're still a few days out. So generally, this is the next time we see them pick up liquidity for the cycle. We might get kind of volatile into this time around, just because of the FOMO and pressure on the chain. Remember that a lot of the FOMO that came in on Friday were zero DTE calls. There just tons of calls at like 27, 28, 29. These all got burned by the put wall. Anybody who held these, past the morning, very likely didn't see very much profit. There was a breakout in the second part of the day, but if these were bought in the morning, the profit from that later in the day breakout was most likely minimal to non-existent. So, most of the FOMO got burned up, which is not good as far as like bullish investor confidence goes, but Jimmy doesn't ascribe to those same psychological implications. You should totally dress up. Maybe. Expect me to chat a lot more now that I'm unemployed. Fuck yeah, Bean. Wait, is that a good thing? Did you want to be unemployed? I don't know. I know that you killed it on BBBY. If 20 is a hard bottom for GME, will short vol players let the price climb eventually so they have more downside to push against? Well, we haven't been able to hit 20 yet. They're mostly tapped out of liquidity. And I think more important to the big picture here is that the market is constantly pushing up. Um, I'm not sure that the market's going to stop pushing up. In fact, it looks like shorts are starting to get squeezed in the market, like in the major indices, SPX, SPY, across big tech like Apple, Nvidia, AMD. The pressure's really being applied, and if all of those push up, they can only internalize so much on GME before it breaks. Um, so it could break early, and we could see, you know, uh, like another one of those events like we saw in August, where you know pressure is released before the OPEX period, and that is something to be concerned about. If you have cover calls out, it's something to consider. If you're not exposed to the upside and you want to be, that's also probably pretty important for that as well. I do think they'll try to control it as much as they can. Obviously it is still ideal for them to run the stock hardest after OPEX, not before. How are they out of liquidity on GME? The borrow rate is like 9%. Well, if they turn to the lending pool, they are going to increase FOMO to levels where it is hard to control, right? We already know this from March, we know this from May. If they start raising the borrow rate, not only do they attract, retail investors, but then they start to attract institutional investors as well. And they can fight us off all day. We're not a problem, but big hedge funds coming in buying hundreds of thousands of contracts is a very big problem for them. Put on the meme stock costume. All right, let me see if we've got any questions here. All right, so answer the thing about the $20 bottom. Top tab, because I don't know how to allocate my funds correctly yet. Would you consider cutting Upstart calls and jumping into GME? Upstart is under very similar pressure to GameStop. I don't think I'm not even sure one is better than the other. Upstart Gamma also flat above 30. They have a little more liquidity there, right? As the size of the market is healthier. Um, but they're also failing there at a much more rapid rate than they are on GME, and they've already turned to the borrow pool multiple times. There's also institutional interest in Upstart, which GME's volatility kind of keeps at bay. So they're still very different plays, but they're exposed to uh, similar market mechanics. What's up, Dork? Did you get super fucked up last night? Awesome, because we have a quant meeting in like a few hours, so shape up. There was a lot of people opining that the SPY drops again to like 300. 300. Do you think they're all wrong? You seem bullish. I mean, I thought they were all wrong last time. This time, I don't think they're wrong. I just think they're early. Um, I think we're gonna see some near term continued increases in the major indices. There's still no leveraged put side positioning, and the leveraged put side positioning that is in place, which is far dated and pretty far out of the money, is also kind of giving up. Prices are already moving higher than most analysts expected. Um, and if those start to close out, people are going to start leveraging the long side, which only accelerates our price movement up. When we were testing 3550 and 35, like the 3500 range, everyone thought I was fucking crazy for going long on the SPY and SPX, and I was not. I was very right. It's moved up 400 points in the last 2 weeks, and it's been really profitable. I think the effect of what caused that is continuing. So obviously the Fed rate change on the second is going to be a big deal and have a really big effect on what happens going forward. But I think we're going to continue to see some upside there, at least for the next few days. How's the Pickle Man doing? Looks like wheat will be going up soon after the grain ships were canceled, right? I'm pretty excited. I took profits on wheat and repositioned like about a month ago, I think it was now. Um, and yeah, it looks like we're gonna get another big bump in wheat. What are the parameters that define how much can or can't be internalized? Is it just total assets under control, other collateral? Yeah, I mean, to an extent, they can only take on so much inventory, but you're talking about hedge funds with hundreds of billions of dollars of leverage, and even if there were 30 or 40 stocks that present a great deal of risk to them, it's not very hard for them to control them, and especially given that most of the stocks that they do this on to a high degree are or do it on really aggressively, like this short volatility positioning is really aggressive in like micro and mid cap stocks where their ability to control the price is extremely strong, right? That's one of the ways in which they offset the risk in the position, is because if they have $500 billion of leverage, and GME's market cap right now is what, 8 billion, 8.57 billion, right? Like it's not really a problem for them to manage it. Do you think they tried it in May? I think they had no choice in March and May. I think they dried up so much liquidity going into March that they had to tap the lending pool. And then not enough people sold at the top. Like March didn't generate enough liquidity. And so going into May, they needed to tap it even harder, right? And that's why we saw the borrow rate cycle up into March. We saw it dwindle a little bit down into April, and then they ran out of liquidity again and had to turn to those prime pools once more. The borrow rate is significantly higher still than it was last year, right? Last year the borrow rate stayed at like 0.75%. They didn't touch the lending pools if they could avoid it. Because right when you start borrowing from the primes and from those prime lending pools, you immediately expose yourself to counterparty risk that doesn't exist when you're borrowing from ETFs. Like an ETF's never going to recall against your position, right? But a bank can. So, if you're going to Fidelity to get your shares and a bunch of retail sells out, you've just gotten, margin called for however many shares got sold. Now you have a forced buy-in on your hands, which is something you don't have to deal with the ETF. So it's very disadvantageous for them to turn to those lending pools and try to get shares. And that's something I think I've talked about for a pretty long time now. They want to avoid using those real shares as much as they can. They don't want the locates. They don't want they don't want to fail in the primary market. They'd much rather fail on an ETF or have the market maker deal with the fails vis-a-vis the options chain. Do you think we'll see downs before ETF FTDs? I have $27 cover calls and GME for Feb 4. I don't know. If the market keeps pressuring them, they may have to let off some steam. I don't know how much they'll let off or when they'll let it off, but it might be a good idea to consider getting some out of the money exposure to protect their upside and make sure that you can continue to maintain exposure to the upside. It's not the best way to handle a covered call, but sometimes you have a covered call out, say like a $27 CC, and the price moves that call in the money. Now, if you think the price, which GME is primed to do, could break out very, very hard from that point, you can then buy an out of the money covered call, or an out of the money call. Sorry. You can buy an out of the money call, and that can protect the difference. So, say you bought a 30C, right? You're gonna lose this on this $3 gap on assignment. Well, not entirely, because you still have your credit from your $27. So, you're probably going to lose like $2, maybe like $1.80 a share. But what you do is ensure that any price action above 30 is still captured. It's like I said, it's not the greatest way to hedge a covered call. But in the event of an emergency type of situation or where, it starts to look dangerous, it is an option. Obviously, the risk here is the price doesn't move up, and you spend a bunch of credit on out of the money calls that never go in the money. It's almost like creating a bear call spread after the fact. Except it's a cover call, so it's not, yeah. Wheat is the one you monitor for wheat, correct? And also JJG is the other place where I have exposure to the grain subindex. There's a bank holiday on the settlement week of November OPEX. It's not, I don't believe the holiday is the holiday during the OPEX period. Yeah, that could matter. And it's on the 24th. Yeah, it could definitely have an effect. It's later in the week, so I think we see something more akin to last November, where they start covering early because the settlement will still come due. The deferrals will happen on the 24th and later, but I think they'll want to cover absolutely everything by the time we hit November 24th. So instead of extending their covering period I think that Thanksgiving holiday, and I think it did it this last year as well. I think that Thanksgiving holiday actually tightens up their covering period, and so they have to cover more faster. So we may start to see the price run, and I do expect a position before this happens. We may see the price run early into OPEX, like the week before we may start seeing covering begin. And something to be aware of, right? If the market rally continues until the end of the year and the target is actually like 4150, how will this play out? Strong ups, strong downs, slow upside for 2 months? What do you think? I don't think we're going to see too much leveraging to the upside, but if the Fed is dovish, we could see more. I would say that for now, we're going to see probably a continued slow climb up. And it's not that slow if you consider, how Friday was treated in the market. We went up quite a lot on Friday. It is not a rapid increase, but it is just a constant trudge upwards. And remember, they're still just getting over the hump of that negative gamma hedge, especially on like SPX, which was negative 33 billion per 1% move to the upside. So every 100 basis points, you have another $33 billion being deleveraged, right? And so now that's starting to break even. And really, I think it's starting to break even for the first time this year. Let me double check that, make sure I'm right, but it might be one of the first times that we've seen um, a shift to positive gamma on the market maker side for SPX this year. No, I'm thinking GME. Okay, not the first time, but the first time we've seen a shift to positive gamma since July 18th, 19th. It's been a long time since we've moved into like a positive gamma range. Now remember, when the market maker is positive gamma, it means that they're net short puts. So puts are they're selling puts. Um and well, they're long puts, short calls. There we go. So they're selling calls, long puts. Yes. And that stabilizes price action in the positive gamma ranges. So that means that, the market maker is buying into falling prices and selling into rising prices. We're not quite there yet. Friday closed still negative 2.5 billion on the SPX. But the shift in trend is really rapid, and when it flips positive, that doesn't mean it's more bearish. It actually means it's harder for shorts to leverage the downside, which is already expensive because VIX is still elevated, and we're about to hit another row increase, which would devalue any put positions bought at this point. JJG has hard red winter wheat exposure. As far as stocks, I have no idea. Isn't it the MM which internalizes? How can hedge funds internalize? I thought internalization was a byproduct of PFOF. No, internalization is a byproduct of the exchange. PFOF makes it easier to internalize, but it's not the market maker who internalizes, it's the DMM. NASDAQ has internalizers because they don't have DMMs. But on NYSE, the DMM creates an inventory of all the stocks that they have oversight of. Each stock is assigned a specific DMM, and they keep an inventory of that stock. And in order to reduce volatility in the market, they can internalize erratic order flow, and then kind of diffuse it over the trading session. So, if someone came in and bought 5 million shares of GME, obviously due to GME's liquidity and wide bid ask, that would immediately like blow up the bid ask, right? Like the ask would just disappear. And once the ask is gone, the price just rockets until the next and that would it wouldn't actually trigger the price rocketing, right? The clearinghouse would simply halt the stock until the ask had filled, but it would create a ton of volatility, which creates volatility begets more volatility, and it begets FOMO. So by internalizing this order and satisfying it from inventory, they're able to slowly break it up over the course of the trading session, thereby reducing volatility. PFOF helps because they can see the orders before they even come in. So they can prepare themselves for demand before the demand is even realized. Why aren't they needing tapping the borrow pool now if liquidity is so bad? I mean, they're probably getting very close to the point where they need to tap the borrow pool. Liquidity is similar to where it was before the February run up. Maybe even a little worse. I would say it's a little worse than it was before the February ETF FTD period. But remember, they didn't have to cover OPEX in Feb, so they were able to get a lot of liquidity during that period. If you don't remember, Feb OPEX actually did have a really big run. It had a big market-wide sell-off due to the beginning of the conflict in Ukraine. So they got kind of lucky in February. Otherwise, they probably would have had to have run it in Feb and March. Is there a scenario where no one wants to lend GME shares at any price? No, probably not. I mean, the more the cost to borrow goes up, the more incentivized lenders are to lend it. I really think you should do some digging into Mercedes-Benz. Their profits are great, their growth is great. The stock is cheap at a PE ratio of 5. Really good buy and hold for everyone. I mean, it's kind of like the luxury brand theory. I don't believe Mercedes has a US listing. So I have, yeah, it's only an OTC listing in the US, so I have almost no interest in buying it. Um, if you're in Europe, maybe. I think I looked into it a little bit the last time you brought it up. I mean, they look good. They're, actually, a lot of the luxury brands are hard to get access to, and a lot of people don't have access to OTC stocks, or they feel like it's very risky investing in them, and it can be. You lose your SPIC protections. Um, As somebody who plays buy rights but cannot CSP due to regulations, how to best protect from a significant upside movement and priced out, i.e. if wheat surprise runs back to 12 and stays there. Hmm. So you're buying and writing contracts against wheat? I mean, You can pull back your exposure. You can buy calls out of the money, like leaps out of the money. So you could use your credit to protect your upside. If like some sort of crazy event happens, which is kind of what I talked about earlier. Tomorrow's my birthday. What kind of shenanigans do you have planned for a Dan for his birthday? Shirt off, Gork? Dress up as trades? I'm probably not dressing up as anything. I don't really like Halloween that much. We'll see. But I currently don't have any plans. I'm already like a cartoon character. Maybe I'll just be normal me tomorrow. No VWAP hat. Throw on a tank top. Weekend Gurk. You know? Like I'll mix up so we can like have different action figures when I open the merch shop. What SPX scenario do you see as more likely? It keeps pushing up until FOMC, JPAD being hawkish, or two, JPAD says bullish things and we keep pushing past 41.35 until CPI and we start the next leg down. I mean, I don't really like how contained uh your two outcomes are there, but I think the Fed is just going to continue to push ahead with what they're doing. So the Fed's effect on the market, given that a 7.5 rate hike is already expected, as long as they move forward with a 7.5 rate hike, I think it remains like a fairly neutral effect. Not only in the SPX but in futures as well. Obviously they're going to make some statements. We'll see where those lead. But yeah, we could be waiting as long as CPI. We'll see if we start to see more leveraged bullish positioning, then that'll give us a better idea of if we're going to continue moving up. At this point, with the market rising as much as it has, I don't even know how much of an effect economic data is going to have. The further up we move, the more dangerous the position the shorts are in. Even though their positions aren't huge right now, they are still leveraged, farther dated and out of the money. Things like the JPM collar and stuff like that. And movement on those big out of the money, far dated positions, as they get more and more scared of the potential upside, that can really trigger like a big run, regardless of the economic data. And it's more likely that a rate increase will just further exacerbate the current situation. So unless the Fed doesn't do a hike or announces some sort of pullback, or a scale back in rate hikes, then I would imagine that we're just going to keep doing what we're doing. Because positionally, there's kind of like no way out of this. Like there's no advantageous route out. I recall you doing quick math for a possible buyout price for Rev. Assuming it does get bought out, what price could that share price be? Um, I don't know. They have a lot of debt, assets and liabilities total like about $7 billion. So, share prices. I don't know. They're in bankruptcy. They've been delisted. It's hard to say what kind of offers will come in. I mean, I guess we'll see. I mean, I'm sure Perelman's gonna demand a pretty high price. And I think this is what happened before, is that buyers came in and they were interested, but they weren't going to meet a satisfactorily high price. Um, and I think they're hoping now that they can. So basically, they came in and Perelman didn't want to take their offers because he felt they were too low. Remember, he has a cost basis around $20. And after holding for as long as he has, I highly doubt that he was willing to accept like $25 a share. So now I think they're hoping maybe he will be more willing to accept $25 a share. Or maybe with, the debt holders with more control now in the bankruptcy hearing, maybe they'll be willing to. And they'll kind of bully out those smaller unsecured holders. Which it seems like they're trying to do anyway by accelerating this process so rapidly. If you hope you had a good, I hope you had a good weekend and got some rest. If okay, yeah, got that. Bodine, thank you so much for becoming a Dillionaire, man. I appreciate it. Hit me up on the Discord. I'll get you added after the stream.
Happy birthday, Gert. Yeah, we might have a chance, but we ain't got ropes. Give us more than a chance.
Non-linked bear call spread, but your CC is tied to your shares, not to the bot call. Yeah, I mean that's one of the only ways of really hedging that position if like a big move is going to happen. And it really just protects you from the unrealized loss of the upside. Or you buy back. I mean, that's always the other option. You can roll, but that can be a dangerous game. If one wants to hold Goog long term, is it better to sell CSP or just do a buy right to take advantage of the lower price now? I don't know how long this low price is going to last. Buy rights are okay on Google right now. Let me look at the IV real quick. Hmm. Yeah, I mean IV30 is pretty high. Buy rights aren't terrible. This isn't really my target range yet for Google, or at least not where I want to buy more. Obviously, it came very close on the drop, but Friday's rally kind of upset that a little bit. You're gonna have to wait for like another market downturn if you want a really good entry, but 96 isn't a bad place to start building a position. I just think there'll be better opportunities maybe like next quarter. I would be careful of the SLD period this month. I'm worried that it may not be realized in the same way. Since we're not seeing a lot of margin deployment across the market, or at least not a lot of heavily leveraged positions in the indices, I would be careful that there may not be a huge amount of equity sell-off for November's SLD. I might start positioning for November OPEX sooner, maybe very soon while IV's low. Do you find the Gamma Shift Point, Spot Gamma, Market Chameleon? I don't think so. Spot Gamma might have something like that. Both of those services are a huge waste of money. Spot Gamma's not as bad, but Market Chameleon's a huge waste of money. What happens when gilt sales resume November 1st? We'll see. I thought they had a plan for that. Flat choppy till FOMC 75. Well, don't forget that there's gamma exposure from all the fucking calls that went in the money on Friday. The market ran big on Friday. Shitloads of Apple calls went in the money. A lot of like Tesla, Nvidia, Visa, Caterpillar, all the big heavily weighted companies in SPX saw fairly significant price improvement last week. So I mean, fucking even Amazon surged up, right? So, you know, that's a lot of gamma exposure market wide to be realized in the next T+2. And that's before the Fed meeting, right? So I don't know how much that's going to be contained. Do you believe we'll have an opportunity to probably deleverage from December Upstart positions over the next couple of weeks? I mean, I'm willing to hold them out through November OPEX, but yeah, there might be an opportunity through the ETF FTD period. I think if we see like a strong ETF FTD period, which it looks like we will, Upstart has a lot of ETF FTDs. Then I think that'll give an opportunity to roll out, close and roll out December's. This is what you said in your exit DD would happen when MOAS starts. We'll see. Is there anywhere we can see the inventory of the DMMs? Absolutely not. Do you have any puts on GME right now? No. I generally don't buy puts on GameStop. It's not a very profitable game. I'd much prefer to sell calls and naked calls and capture the volatility than to get burned by the drop in volatility by buying long puts. You can profit off them. You have to buy very far dated puts and you have to buy them at high prices. But because you have to dodge the short-term spike in implied volatility. But you can. I mean, it's not it's an option. Keep the camera off tomorrow and you'll be a ghost. I have Wheat and JJG. Bruce Wayne. They're already the meme stock guys portrayed by Fidelity. I'm pretty sure that was Houston Wade. I'm like 90% sure that they got Houston Wade or his brother to post for that photo. The video is primed for a run up into earnings, it looks like. I think it could run to 145, 160 into November OPEX before coming back down. I hope so. The higher it runs, the cheaper the puts I want to buy are going to get. So, to clarify, you're extremely bullish the short to medium term time frame. Short. Short unless I see evidence otherwise. But yeah, I could easily see the markets rallying into the middle of November and then something's going to happen. Something big. Do they really ever cover FTDs, or can they keep swapping and resetting them forever? I mean, that's how they make money. They do cover them. They just don't cover them in the way that would benefit long term shareholders the most. They cover them in a way that benefits them the most. But yeah, I mean, they could keep doing it forever. Obviously, there's ways to take advantage of them doing it forever, unless there's some sort of significant regulation change. Which I don't see happening. Even the new proposed rules don't seem like they're going to make much of a difference. Can one do buy rights on an OTC stock? No, because you can't write. You can't do the right part. No new contracts are created. This is not a stock question, but I love being a Dillionaire and be able to listen to you on Discord. I remember listening to all the songs. Anything that can be done about that? No. I can't. I can't get the audio to play through both because Discord doesn't capture my desktop audio. It just captures my microphone, and like the songs don't play through my microphone. I guess I could set up a boombox or something and just, or like some directional speakers and just point them at the mic, but that sounds like a lot of work that I'm not going to do. Which ETF FTD period is this coming up? IJH? No, it's all of them. It's all of the ETFs that were tapped for liquidity on the previous OPEX period. So it's not just IJH, it's IJH, XRT, all of them. You showed that liquidity indicator for Jimmy last week during the stream. Does the same indicator show anything compelling with Upstart? Yes. Yes, it shows that Upstart is also very illiquid. It continues to be illiquid. That's one of the reasons we're not super worried about them getting it off of Reg Sho. Getting it off of Reg Sho at this point in time, given that it's been on there for so long, isn't really a sign of strength. It's a sign of weakness. It means that more than likely they are having issues with locates and they need to cycle it off of Reg Sho in order to dodge those locate requirements, those forced locate requirements. I think Upstart in its current state probably will end up back on Reg Sho quite soon. After losing my shirt on Rev, I'm now full port in Fubo. It's good to know that you didn't learn any lessons about diversifying your portfolio, even a little bit. Can you go over price targets real quick and best time to sell covered calls? Thanks. Yeah, we can take a look at Fubo. Fubo is still very stable in this like 350 to 390 range, with most of its volume over the last several weeks trading in there. I do think Fubo's about due for a reprice. We're moving up onto a very large put expiration period, and I suspect that many of the puts on Fubo have been placed there in order to allow institutions to start buying in and accumulating shares. A lot of the plans Fubo's announced are very bullish. The fact that they have the right to integrate any gambling platform into their streaming service means that they don't really need to develop it themselves. Initially I didn't like the idea of them dropping gambling, but if you look at the cost benefit, it's pretty huge. And then they can focus their capital and their resources on getting more and more broadcasting rights. So like the Netflix model, except they don't make any of their content, right? So it's almost a lot better that way. And I do think they will add gambling to their platform. They didn't get rid of all of the licenses and applications they've applied for. They still have all of that, and that has intrinsic value of its own. So if someone wanted to partner with them, say a separate gambling service who takes on the cost of risk and the cost of development, they would still need to integrate into Fubo's platform, which I think is very good in the long term. I don't think the company's that mismanaged. They have a decent amount of cash burn. They have a shelf offer, but I don't think we'll see that realized in the near term. I think they'll wait for their current actions to drive a better price before we see them selling any shares. And if you're in early enough, like I think we are, then there should be plenty of opportunity, or you could continue to hold. But as we move into this kind of period where repricing is possible, I think we'll see higher prices. I'd be very careful selling cover calls into earnings. It is and like one of the basket stocks, so it does very much correlate to the same type of price action as GME, with ETF FTDs and OPEX periods being very high risk for selling covered calls and the rest of the time being fairly minimal. Do you have a strategy for your plays going into this week? Well, I have about 20 covered calls out right now that are in the money on GME. I was kind of hoping that I would get assigned on them, but I didn't. They were part of like a smaller buy right, and the cover calls are sold on like FIFO, so um, I'll probably just buy them back, unless we see like a big drop in price on Monday. If they get assigned, I'm not super worried about it. I don't think we're going to see a obscene amount of price improvement over the next 2 weeks. I think they'll try to hold the line as long as they can. Um, but it's more advantageous for me to buy them back and sell them on the ETF FTD period if they're gonna continue to be pressured. Any chance Fubo earnings making me enough money to redo my new kitchen? It's possible. I'm sure they'll get the shit shorted out of them after earnings and then probably move with ETF FTDs or OPEX. We'll see. But yeah, I could see Fubo breaching 5 over the next month and a half. It's a very low target for profits, but whatever makes you happy, Natty. Explain dodging locate requirements again. Well, remember that when you're on Reg Sho, all the fails deliverable that day are force settled, right? And so they need to be located and cleared out. By getting it off Reg Sho, you get to dodge a period of time where it's possible you can't facilitate a locate. So, if you have FTDs over a range, right, like this, and say, you're not gonna be able to facilitate locates for this period of time, right? Then you're gonna start trying to get the underlying off of Reg Sho early, so that when you hit that period of time, you don't have to find the shares. Now remember, because FTDs move cyclically, so and we know they're approaching a peak for FTDs because we have ETF FTDs coming up. Not only that, but and we don't talk about these, but they're still there. And the reason I don't talk about them is because they don't affect price improvement unless the underlying is on Reg Show. So actually, OPEXs generate and ETF FTDs, right? And a long time ago, we used to talk about both. We would plot and track both and ETF FTDs. Now we only track ETF FTDs, and that's because these are net long or net short. And so they have a real effect on price improvement, whereas FTDs are net long, they're net short, they're all over the fucking place. But if the underlying's on Reg Show, net long FTDs have been long cleared, right? And the only thing really left and a forced buy-in would be created on net short FTDs. And so in FTDs, which are sometimes significantly more substantial than ETF FTDs or net short, they can also create price improvement. It's just more rare that we run into that situation, right? So we don't track them, but these occur, before ETF FTDs. If we go look at Upstart, I can show you how those two periods would look, and you'll kind of get an idea of what they're running away from. So let's go out here on the daily, and we'll go back to the previous OPEX period, which is August. There's August 19th, which is the expiration. So we have you know, we have our for FTDs, we have 2 days, and then we have our 35-day window. And then we have our settlement begins here, and this extends out for 4 days. Hold on. T plus 2 plus 30. No, these begin here. Sorry. So these begin here. And then ETF FTDs, same period. Shit. I'm sorry. I'm doing this for the wrong month. So we're in November. So here, ETF FTDs. Okay. ETF FTDs, and then MFTDs. There we go. And if you look at where Upstart comes off Reg Sho, you'll see that they're trying to dodge FTDs for that period, right? So FTDs start a few days before the ETF FTDs, right? And so we end up with like two. Let's draw some windows here. So we have a window here of ETF FTDs, right? And then we have a window here where ETF FTDs begin. And then there's some overlap in these two. This is supposed to be 4 days. So they overlap like that a little bit. But generally nothing happens in this window. But if you look at when Upstart comes off Reg Sho, it's exactly when this window begins. And this is the window they're scared of being on Reg Sho. They don't want those locates. If you look at GME's Reg Sho flop in 2020, it plays out exactly the same way. I think Fubo's a little quick to spend money, but they're spending money on the right things, right? So that's what I mean, but I don't think they're that mismanaged. Is it worth getting Upstart shares? I have quite a few. I don't know if it's worth it, but I think the company's undervalued in addition to the rest of this. But I did only get shares through assignment to be transparent. I haven't just purchased them. I wouldn't take all my profits there, but a man needs a new kitchen before I move in. Fair. I think the November period you might realize that. So how did they get it off Reg Sho without a strong run? I mean, you don't need a strong run to get it off Reg Sho. You need to come in underneath the daily requirement for 5 consecutive days, which you can, there's a few ways of doing it. You can do it by using reversal trades, which is what they do on GME to reduce any floating FTD obligations. And what a reversal does is essentially you buy an in the money call and exercise an in the money put. So the net is 0, right? But you generate 200 volume. You generate buy volume and sell volume, and that helps you wash FTDs through CNS. Those FTDs will pop back up, but you only need to suppress them for 5 days, right? How much do you think Upstart is currently worth per share? I feel like they should be trading at a better multiple than they are. Their competitors do, and I think their business model is better than their competitors in a lot of ways. So, yeah, I think the multiple they're trading at relative to their sector is really really low. Um, don't get me wrong, their competition's multiples are too high because of the you know euphoria and valuation in the market right now. But yeah, Upstart should probably be trading at a like slightly better multiple, and I think as they start to pick up more and more and more clients, and it really starts to snowball, risk management teams are very shy about taking on new products and systems because they have ones that work, right? So you really have got to show a lot of potential in cost savings in order for them to consider moving forward with a deal. But I think they do. I think they're presenting a lot of benefit to the banks that they're beginning to work with and the lenders they're beginning to work with. So yeah, I do think over time that Upstart's a very good price. I think it's very cheap right now. Um, you may have to wait out some, for real valuation to be realized. You may have to wait a few years, but or at least until the Fed starts to pull back rate increases and lenders get real handsy with dishing out loans. So at a minimum, 6 months to a year for the value perspective on Upstart, maximum 2 to 5. And yes, in a market crash, it could be worth a lot less than it is now, even. Any change in your yen position? I mean, I'm like up a little bit on it, but not a ton. I have a lot of time on it. The whole market looks like it's going to squeeze up from T+2 exposure, overlapping continuously until some bad news comes out. Yeah, I think so. Yeah, I think the next 2 days are going to continue to be pretty bullish. More so probably than we're used to seeing into a Fed meeting. Tuesday might be a little more reined in. Remember that, they're not going to carry exposure the full T+2 period on like indices and stuff. Usually that'll be resolved rather quickly. GME, they can carry the T+2 exposure out because it's like a little nothing stock, right? Like it's tiny, but they don't take that risk with like SPX, whatever gamma exposure was created on Friday, you'll start to see resolved in pre-market, right? Can you discuss Oxy? Yeah, what about it? I mean, Zom just hit great earnings. I think Oxy's well positioned too as well. I think we're gonna see another spike in oil prices probably in the next like 3 months. So Oxy's just like a good buy and hold over the next year or so. Um, they're the way they run their business and their exposure to oil pricing both make it really attractive to get exposure to crude. Um, I have a cost basis in the like $63 range, but um, you know, uh, as the markets rally, we're seeing crude pull back, and that could give another entry opportunity. So, anything sub like like $70 really is super attractive. Below 60 is a phenomenal buy. I don't think you'll see below 60, but the 65, 64 range, very good. Assume that their earnings will be as good as. Do you expect CAT to continue to see price improvement as the market rises? Probably, yeah. Caterpillar can probably start moving up. It broke through its upward trend. I'd be careful now, like very careful. But existing positions could continue to realize more value up to like 230, maybe even higher. Set stops, be careful. There's not a lot of support and resistance in these ranges. So, yeah, I mean, but it's just still flying up. So watch 227, watch 220, where we're at right now is the last big resistance until we hit 231. Yeah, no, the railroad strikes just resolve. I don't know if they'll strike after midterms or not. They might, but it's pretty unlikely that they won't reach a resolution. Very, very rarely do those ever go beyond a point of resolve. Like I know the news pushes the railroad strikes, but it's always just a nothing burger. Like it's just like a big foreboding thing that like the news outlets can push and scare people, but it's just bullshit. And they'll just bring in the National Guard. They already have a backup plan, right? So they don't give a fuck. Like it's not the railroads aren't going to come to a halt or anything. It's happened before. Um, I woke up to the sounds of my smoking hot neighbor chick moving out yesterday. Feeling bummed today, same like Pitts. I guess you should have gotten her number before she bounced. Seems like you might have liked her and didn't tell her. How much theta should we plan for the Upstart movement? Jan expiry enough to cover into December movement, or at this point should we try towards Fab? I think Jan's sufficient for November OPEX. I think we'll see upside before December. True, but you never know. I mean, all kinds of shit could happen tomorrow that you don't know about. I think the railroad strike's the one I'm worried most about. Do you have any of your SPX long position left? I took profits Friday because I figured we'd drop into FOMC. I am actually out of my SPX long position entirely at this point. I don't have anything left. 1 second. I only have enough premium to buy back half my GMECCs. Ouch. Guess I'll get a sign and wait for after ETF FTDs and hope for a lower reentry. If you don't get a lower reentry after that, at some point in the next 3 months, GME is probably going to be significantly cheaper than it is right now. So, there's always another chance to buy back in. Any guesses when Jimmy could see $40 again? Year end run, maybe, or far longer, more likely. I think our best opportunity is in the next 3 weeks. Jamie looks really fucking good. I know we've had a lot of disappointment recently with September and October, but it's starting to look primed. I think we're gonna see a run before the end of the year. If not, if not in the next week or so, definitely by November OPEX. What's so cool about November OPEX is it has like we have enough time since they started moving back into short vol positions. Now we've had kind of an OPEX period where um all the things that we want to see were there and they didn't run it, right? Which means they didn't get any liquidity. Kind of like February, not so much like May, but a lot like February. Like February looked really good back in the early part of this year, but we didn't get a run, right, and that led to like a really explosive March run. So if we can not run until November, that would be fantastic. I just got past the part where something big is going to happen in November. That's rather ominous. Yeah, I know. The something big has already begun. Yeah, I don't know why people are okay. Listen, guys, if you're selling at the money covered calls, and you're not selling covered calls like above gamma max, which is the more risk defined upside, your chances of assignment are always going to be high. Like there's just no way in fucking hell you're selling at the money covered calls not expecting to get assigned. You're at point 0.5 delta. It's like a coin flip on assignment. What are you thinking? Even if we were to be shorted, we wouldn't be shorted until after the ETF FTD period, right? Because they need liquidity to short us. That part was really clear. I sold 27s because I don't give a shit if I get assigned on them. I'm not I'm not teasing. I'm just not speaking out about it till I have more data. Should I call my mom? I don't know. Do you like her? I want to buy puts on anything right now. No. No, I probably wouldn't buy puts on it. With my CCs open between 27 and 30, do I buy back more of the cheaper 30s or less of the 27s? I mean, you want to protect the largest number of shares possible, right? Whatever allows you to I don't know what your premiums and stuff are, so whatever allows you to protect the most shares. timing of the peak and the height of the next peak. I don't know. We have ETF FTDs coming up. I think we're going to realize some price action, maybe up into the $30 range for that period. I think whatever liquidity is generated there, they will use to short as hard as possible going into the period just before November OPEX. But I do think we'll run into some of this. Right. So ETF FTDs short, and then I think we'll start to see covering begin early for November OPEX. I think this is going to be fairly similar, but don't forget this ETF FTD period is probably going to be realized in a very similar fashion. I don't think we'll necessarily get like the big risk off like we did in November, because BBBY is not going to announce a share buyback in the middle of the ETF FTD period, right? But we likely will get some ETF FTDs, right? And they're not gonna establish sufficient liquidity, so we'll probably see a smaller short on the back end of that. And then I think we'll start to see a climb going into the week of OPEX expiration. So into SLD. And the effect of that market wide is one of the reasons I'm cautious about playing the downside of this upcoming SLD. The downtrend on UAL is since May last year, and it's coming up to resistance on it. I mean, I see the downtrend, but I think the S&P is going to continue moving up. So you wanted to reject, and also their last earnings was a little better. You're expecting it to reject into a rallying market, and it might not. I really don't. I mean, like if you're buying far dated puts, sure. But I think you'll have some upside slippage on those. DC end puts over this week. I mean, if you have sufficient data, it's probably fine. I just don't think like a short dated put position's very good there. Like 30 DTE, I wouldn't do. What if JPAT announces a 1.0 because the economy is proving too resilient to their rate hikes? He could. The shock would probably crash the market in a few days. Not the day they announce it. The day they announce it would probably be kind of bullish. Don't forget that the momentum of positioning in the market can be much, much stronger than the news of macroeconomic effects or monetary policy. Because it doesn't matter what you hear, it matters what people are buying and selling, right? If we get a run in November, expecting reduced vol over time, i.e. smaller runs from F-Man, assuming no outside events, news influence. I think we'll probably see well, first of all, it would reinstate confidence in the F-Man cycle, which would be nice. Second of all, I think that seeing a run in November for November OPEX would massively increase implied volatility if it's pushed out that long. So that doesn't necessarily mean lower expectations for following OPEX events. March was one of our largest OPEXs, if not the largest. Not only by percent increase, but also by the amount of volume traded. Remember, the less liquid a stock is, the more volume needs to be traded on it. So if I'm right, as they continue to short volatility on GME, then actual OPEXs that have a buildup should be bigger than previous ones as long as people keep buying and holding. Which of the mega caps do you believe have to have the strongest price improvement along the market rally in the next month or so? Probably Google, Apple, and Amazon. Not in that order. Apple, Google, Amazon. Amazon and Google are kind of interchangeable. I would say Amazon did a little better than Google, actually. So yeah, Apple, Amazon, Google, Netflix. Also, I think Netflix is actually doing quite well. So if you wanted, yeah, if you wanted to play like a sympathy move. Okay. No problem, Elliot. Are we Moas yet? Hey Kirk, add the money December puts to hedge my deep in the money Jan calls. Due to expecting some bad news over the weekend that ended up not occurring. Cut losses on December puts or wait for a pullback. Deep in the money Jan calls. On what? Like on SPX? You could hold it a couple days. You probably, I mean, depending on volatility surrounding the Fed meeting, you might get your money back. I don't know how close to the money you are, but if you're at like 3,900, like right at the money, then you'll probably get an opportunity to get out of those a little more profitably before December. It's so cool that we know how the OPEX cycles and Reg Sho work going into Upstart instead of trying to piece it together on the back end. Thanks for all the services you and the quant harem do. Well, you know, a little while back, you know, around the split on GME, it seemed far more beneficial for me to start using the knowledge we'd gained on GME to find other stocks that they're doing the same thing to, right? Instead of staying so focused on GME where, you know, they very much learned to manage the position, the amount of capital necessary to deploy is minimized in order to increase and reduce volatility because, you know, the size of the market is decreased because of DRS. And so if we can find positions where they're more risk exposed, but using the same strategies, we can exploit those. And you know, that's in a way what Revlon was. It's in a way what Fubo is, and it's what Upstart is. So, you know, obviously it's in its infancy as far as development of a strategy goes, but it is one, and it's been moderately successful so far. You know, Revlon made a lot of money before it lost it all. Fubo's been very stable and solid, and their growth improvement has been on track, and analysts have picked it up significantly after I did. So we're way ahead of the curve, right? In before even the institutions began buying in heavily, and I think that's a really good sign. Upstart, I think we're even better positioned on. So you know, obviously, every time we find one of these and we focus on it, and you know, we're gonna get faster and better at timing it. But it does take time. You know, our data sets are limited, and you know, we don't have billions of dollars in capital to make a move happen. What new chair are you buying? I want to get the what's it called? The steel case Leap They have one with a headrest. I think that's the one I'm gonna buy because Herman Miller just came out with a chair with a headrest, but everyone says it's kind of like a piece of shit. So I'll probably go with the steel case one. I liked my old steel case better than I liked my Arian. I don't really like Herman Miller chairs very much, so. Do you think we could see a gamma squeeze this early? You're not gonna get a gamma squeeze on Mullen. Dude, why are you always in on such shitty stocks? If Mullen runs, it'll probably just blow through Gamma Max and come back down again. It's not gonna gamma squeeze because nobody's gonna exercise it. No institutions are gonna come in and exercise their calls on that because the company's kind of a piece of shit. They're doing some things to make themselves look a little better, but not yet. I mean, if I were gonna expose myself to Mullen, which I have no intention of doing, I would just buy like a bunch of shares and wait 5 years. Their best chance of being their best chance of showing any shareholder value, besides short-term like spikes above $1, is probably they get some manufacturing online and have some sort of piece of tech that someone's willing to buy out and they get bought out. Right now they have like a fucking prototype and that's it, and kind of a shady board. I would have bought, yeah, I would much more willingly buy calls on Rodney Mullen than I would on Mullen Automotive. And if you want to talk about EV manufacturers that have a good chance of being bought out, look at like Fisker Karma that actually has like a lot of proprietary technology that they have patents on. It's definitely not good to sell CCs into earnings on Fubo. You already know earnings are going to be better than expected. I don't know why you'd sell covered calls before earnings. For what? A nickel a call? Like, do you need the $5 that bad? If you were gonna sell them at all, you would sell them on the IV spike before earnings. And then I think Fubo's due for a reprice and you could lose out on a lot of upside potential. I know why you're looking at Mullen. Mullen. Nothing's gonna squeeze there. It's a 50-cent stock. There's no pressure on the risk of the shorts. They'll just blow off some steam, right? It'll blow through Gamma Max, and then it'll fucking you can make money on it. Don't get me wrong, but it's probably the shittiest of all the stocks that you can make money on during the OPEX period. Or ETF FTDs. I don't know how much ETF exposure they have. I don't think it's super high. Nothing's gonna short squeeze. Short squeezes are basically fake. And something worth 50 cents a share is definitely not fucking short squeezing. Can it go up to like $2-3 again? Probably. And you can play it for that. It'll make you a few $1,000. It's not gonna make you a billionaire. Any thoughts on PFE? Earnings 11.1. I have about 1,400 shares. I sold CCs for November and December. I'm a bit concerned about a spike after earnings. I know they're raising prices on like their like some of their vaccine I don't know which vaccines. I know they're raising prices on some of their vaccines. I would probably be a little careful around the earnings periods. If you're long on them, I would maybe wait to realize some value from those price increases over time. Yeah, generally. I mean, you usually don't want to sell CCs into earnings periods. It's not very beneficial as a long term shareholder. You selling any GME CSPs? I did last week. I sold them at 25. I might sell some more. We'll see. It just kind of depends on how much extra money I have laying around. Like when I'm done with all my positioning for the week, I usually just sell like a bunch of short dated CSPs. I might not make a lot on my money, but you know, that extra 1% on shit that I can't find time to manage helps things out. At least my money's not stagnant. Are you gonna position Jimmy calls before or after the ETF FTD period? I don't know. He'll probably start buying some calls sooner rather than later. The question will be, do I sell them during the ETF FTD period and then buy back before OPEX or not? And that I don't know yet. I already sold 350 Fubo CCs for December. Why? It's, you guys make some insanely weird choices with your covered calls. I need the money to close Rev CSPs. Okay, so you're just like taking a loan against your Fubo shares. I hope you don't miss out on anything. Or at least I hope the price restabilizes in a range where we'll be able to close those out. Yo, what's up, Red Ranger? Yeah, I heard about the 4090s melting power connectors. How long out do you usually sell your CCs and CSPs? Usually, if you don't intend to be assigned, it depends on the stock. I mean, that's how that works. Usually, no more than like 14 days, but on some stocks, I'm willing to sell CSPs for like 30 or 45 days. So yeah, it really depends. What would it take for you to do an audiobook technical analysis of the financial markets with sarcastic commentary? I need to know what limit to set the Kickstarter. How many recording sessions is it going to take? Let's start it at like 150 grand. It's only causing problems on left to right torsion on the wires, not up or down. What, the 4090? Oh, I don't care. Thoughts on the silver market? I've been a bag holder on physical silver for like 15 years. Looking to offload some bags in the next few weeks. Um, I mean, I would just pay attention to it. Silver's been. Uh, it looks like it's about to enter another like. No. I don't know. I could see above 19 by the end of the year. If the market crashes, silver will rally really hard. If commodities heat up, I mean, I would wait because if you've been holding it for 15 years, what's another 6 months to get, maybe like $24, $25 an ounce? Do you think we can expect March kind of run end of this November for all those meme stocks? I think it might happen. There's a potential that it happens sooner than OPEX. The pressure is very high. But yeah, and this period looks very good. I don't know how long they can stave off the pressure. I mean, I have no idea internally what their limits are. I will say that they're under currently a great deal of it. I in December or Jan calls. I don't know. Maybe Jan. If I'm gonna be holding them for a minute, I'd probably rather have Jan, but we'll see. The physical bullion prices are far divorced from the paper spot prices. I can't find physical bullion under about 25 an ounce currently. Local coin dealers are nearly out of physical bullion. Well, that's probably because you live in a place where people actually buy fucking bullion. Um, you could just go somewhere more populated. I'm sure you'll be able to find plenty of it. It's usually harder to get bullion in the South and Midwest, but the Northeast, it's usually not that hard to get a hold of. Uh, like Mid Atlantic's usually not too bad. Generally, Nevada always has lots of available bullion. It's not divorced from it's just more money than the paper price. That's also because they charge more for it than its market price, right? They charge a markup because it has storage costs and stuff. But I mean, they're still basing their pricing on market price. It's just there's a markup in addition to it. I have a buddy who owns a bunch of pawn shops that his dad left him, so I'm pretty versed in their systems. I think they need a yeah. I mean, well, ETF FTDs would be a liquidity grab, right? And what better way to keep retail out of the next run than to run it a little bit now for ETF FTDs, get that liquidity, then make them think it's done. Because you've sold all your SPX positions, do you still target a higher price, like over 4,000, and start position again next week? Yeah, I'll probably be entering a higher level position soon. Buy it in these jars called better than bullion. Oh Jesus. Thoughts on Bitcoin? It's rallying a little bit. I haven't really looked at it much this weekend, but we'll take a look. I this rally in Bitcoin has more to do with some bigger macroeconomic things, I think, but I think it'll probably see at least like 23, maybe 25 in the near term. If the market crashes, Bitcoin will drop like a fucking rock. But right now, there's some credit issues in the market, and Bitcoin is maybe a temporary band aid for that a little bit. Do you know if it's too late for Jamie to have any split obligations affect price? I don't think it is. I think there's still some ETFs that aren't showing split adjusted holdings of GME. But those 13Fs come out soon, so they may be updated and just simply not reporting the update yet. We'll have to see. Thanks for everything you do. This last cat run was a turnaround point for my port. Ignore the haters. You're out here changing lives. Thanks, man. Congratulations on cat. Yeah, I think this has been overall a pretty good run for most people. What calls would you recommend to hedge? GME November 11, 28cc. If a run continues, you could probably buy like 30s, or anything out of the money beyond 28, right? If you're going to be assigned at 28, like it's a guarantee you're going to be assigned at 28, then an out of the money call will allow you to capture any additional profit that you would have lost out onto the upside. Thoughts on Walmart or Texas Instruments? I haven't looked at Texas Instruments in a really, really long time. There's a lot of issues with like chip manufacturing and stuff. I'm not sure how I feel about them. They are US based. I think their fabs are here. So that's a positive. I like Walmart. I think Walmart's okay. I'd maybe wait for another market drop before I got in any positions, but it's not like Walmart's not gonna survive. If ETFs hadn't bought any shares, when would be the next time they had to buy? December would be the next rebalance. I don't think they'll make it that long. I don't even think December OPEX is a thing at this point. Like, we didn't run for October OPEX, and I mean, if you guys thought I was lying, you can see it in the price action. Like, it's really obvious they're under a lot of fucking pressure. I'd be surprised if they can maintain control into November OPEX. Definitely not December. They would need a market crash in the next few days almost to relieve their liquidity issues. Could you buy them at any point? I mean, you want to buy them while they're out of the money. What do you mean? Buy what at any point? I don't know what that means, Iron Archer. I've talked about like 900 different things today already. Which plays are you currently most excited about for the short, medium term, next month or so? I'm pretty excited about Jimmy. I'm really excited about Upstart still. I'm kind of getting a little more excited about Revlon, with some of that being rushed ahead. I wonder how it'll turn out. Even though I've already lost all my money there, so I guess there's not much to be excited about. Um, I think Caterpillar will continue to push up with the market. I'm pretty excited about how I'm going to maybe position in the market over the next. Oh, and I'm excited about wheat. Wheat's going to be fun. Oh, the ETFs. Yeah, I mean, I think yes. I think they can buy them at any point. I think they prefer to buy them after OPEX, but I think they can buy them at any point. They could risk off. They did it in August. You know, uh, like you could say we didn't have an August OPEX, but we definitely did. It was minimal. They'd stepped away from the positions a lot, but that de-risk that happened with BBBY on August 16th, that was August OPEX, but it happened early, right? And we know it was because they got liquidity. And when they get liquidity, they short. A lot of institutions, okay, anything institutions are saying publicly is not how they're positioning. I don't know if we'll get a Christmas rally, but may get a rally sooner or continue this rally. I think when this rally's done, the market may not have a lot of life left in it. Do you have a clip of when you were talking about portfolio management or a resource? You can get a degree in finance. Probably, but you'd maybe have to dig through the stream clips a bit. I'll try to do something where I organize all those a little better. Angel Crusher, welcome to Dillionaire, man. Thank you so much. Hit me up on the Discord. I'll get you added to the country club, man. I appreciate it.
Birthday, Gert. Yeah. Yeah, we might have a chance, but we ain't got roles. Give us more than a chance, cause we ain't no cold. Get the cash in advance, cause we hold in the float. If you are what you eat, that makes Gert in the go. Hoping that you read the DD.
Thank you, Girk, for all your time, all your work. Appreciate it a lot. Also, Quant's putting in extra time. Thank you all. Thanks, Stefan. Rev might move enough to bring Jan 35s back to life. It depends on what happens, right? I mean, they can't be any more dead. So, what are all the stocks you consider basket stocks? Anything that attracts volatility shorts, pretty much. The list is far too long to cover, but volatility is shorted in varying degrees on everything. Um, the positions, like they short volatility in Apple and Tesla, but the positions aren't as big because, well, the positions are bigger, but the effect is weaker because they're so large and liquid. Whereas on things like GME, it's more noticeable because the stocks are less liquid. So after November December rally, can we say we are slowly entering a bull market? No, I think the market's gonna crash hard. But I don't use Excel. I'm not an assistant or an intern. Gross. Quarter 123, if we make it that far. I don't think it's going to be all that controlled. Yeah, ETF FTD period November 3rd through November 10th. For GME, it looks like the peak is around November 7th. You said you didn't think it'd crash until next year, if I remember correctly. I thought we'd see the bottom next year. Um, I I was hoping that. Well, I'm still hoping that the Fed can uh, affect their soft landing, but they may not be able to. Upstart ETF FTD peak. I think Carl just sent me it. Hold on, I'll let you know. Upstart a little earlier. I think Upstart ETF FTDs we might start realizing earlier in the time frame, maybe from November 3rd on. Maybe even a little earlier than that. We could start seeing Upstart ETF FTDs. They're highest in the earlier than GMEs are. So, you know, they failed a lot trying to get bots off of Reg Sho. And so Upstart ETF FTDs are a bit front loaded and in an earlier part of the period. They may have already begun to some degree. What will be the catalyst for a market crash, you think, if not earnings? You know, I already wrote a DD about this. Go read it. If you didn't understand it the first time, read it again. It's called The River Runs Dry. I didn't say there was going to be a December rally. I don't care what institutions are saying. First of all, they're incentivized to just lie to you. They don't tell you their internal projections and strategy on fucking CNBC or Bloomberg. Like, you know, they just go out and say what they're told to say. You have to read between the lines, but you know, they're not positioned for a crash yet. I don't know if they're completely aware of what's happening either. Everyone thinks institutions know everything, and they're really not that much different than us. They have, you know, they're more efficient and they have more capital. But their access to data is not too dissimilar from our own. They have more granular data, but the broader trends appear to them as they mostly do to us. Seems after this rally, we may even see a market collapse before the end of this year. That's possible. VIX rapidly cool. Is the VIX rapidly cooling off, or is risk in the market being mispriced? Institutions might have capital, but capital ain't as strong as family. Moana dork. The JP Morgan color always worries me a bit. The JP Morgan color might be worrying JP Morgan a little bit. Does this think some market collapse will cause MOAS and GME? Any truth to that? Probably not. Yes and no, but not for the reasons they think. And it's not super likely. I mean, there is no MOAS, right? It's not a real thing. There's nothing in the market that allows that to happen. Even if everything in the market falls apart, the entire market is designed to create liquidity when it is needed most to ensure efficiency, right? And it doesn't. It's obviously you can never reach efficiency, but short squeezes are even more so, will be harder to come by after the events of January 2021. So no, there's no truth to a short squeeze in the markets as they are currently built and regulated. Big ups, possibly, yeah. MOAS, only possibility for a crash causing MOAS is that selling causes a recall. Yeah. But that recall is going to be happening into rapidly falling prices, right? So what's the effect of that recall going to be? No two market crashes are the same. They all happen for different reasons. Usually the ones people least expect, and they all play out very differently. The current rate of Fed fund increases, we're probably going to see the beginnings of a recession next year. The Fed can pull back. Dollar liquidity is a problem right now. And to stabilize the global financial markets, it's not absurd to think that the Fed could move forward with a couple quarters of QE before moving back into rate increases. Bro, we're already in a recession. Or we'd be out of it now. The GDP is up. The next print would be out of the recession if, even by that definition. Or like double dip into recession. We fell into a recessionary period and then bounced back out of it because demand has remained high. If wage inflation would increase alongside an actual inflation, we wouldn't really be experiencing as many of the economic issues as we are, but people don't like to pay their employees more. Are you positioned? I mean, I'm always kind of positioned for a potential crash. I hedge my portfolio with the VIX. So, yes. Am I positioned to profit off of a potential crash? Not yet. Trade surplus on the dollar is not exactly a GDP increase. Fair. But I mean, if we keep pumping the dollar, it's sustainable. You can't stop a crash. Crashes are like black swan events, right? There's nothing they could do in a fast enough to stop it. Believe me, if they could do so, if they could react quickly enough to stop a market crash, we never would have had one. Yeah, I think the Fed's more than capable of stabilizing dollar liquidity, but being forced to stabilize dollar liquidity is counterintuitive to their current goals, right? Something to think about at least. Sorry, I'm not trying to be so doom and gloom. I mean, it's just we're reaching an inception point. Something is gonna happen, I think, very soon. PT for Jamie is always 10 to 15% above Gamma Max, provided we break Gamma Max. If we don't break Gamma Max over the next 2 weeks, you know, then OPEX it'll be the same target for OPEX, right? If we do break through Gamma Max, remember that's going to likely reduce the effect of the next run. So if there's 2 runs, if we get a run for ETF FTDs, and then we get a subsequent run for OPEX, you should be aware that the OPEX run will probably be reduced in its potential. So if we run really, really hard during the ETF FTD period, the potential for OPEX will be smaller. Is a market crash more likely than a GME short squeeze? Yes. Are you gonna tell us after you front run the puts and VIX calls? I don't know. What the fuck? It's your capital doesn't matter when it comes to front running on things like SPX and VIX. Is it good advice for beginners to play November OPEX and then get out because of the potential crash and wait? Probably not a bad idea to reduce exposure to the market if you think the market's going to crash. We're not ripping for midterms. Political elections have no effect on markets. You can apply like 1,000 data sets to why the markets perform better in the later part of the year, and political elections are not the cause. uh, you know, bills and policy changes take very long periods of time to enact, and markets don't rally hoping for a new, set of politicians to step in. Like the markets just don't care that much about who's being elected. They work in real time. Not the flow of information is far faster. In the long term, politics can affect the market, but it's very long term. You know, a lot of Cat's misvaluation is based on the infrastructure bill, which was approved and passed, you know, almost 3 quarters ago now. Especially not in the age of algos. Yeah, there's just no like there's a correlation there, but it's not causation, right? It's just bullshit that gets spun up by the media. And it is. It's really bullshit. There are like real mechanical reasons the market performs better in the latter half of the year. There's real reasons businesses perform better during that period, and none of that has to do with who's being elected, because you don't know what the fuck they're gonna do once they're in office. It's not like, oh, if this guy gets elected, this will happen, because that's not necessarily true at all, right? Yeah, a crash could bring GME down really, really hard. I don't know, 15, 12, maybe lower. It's a market crash, right? 10, 15-year lows. All of that's possible. Yeah, the market does perform better when there's less risk of policy moving forward unhindered. So the market actually, that is true over time, that the market does prefer a lack of policy or ability to enact policy. Stagnation in politics is good for the market. But that's, that's like laissez-faire economics. The less interference from the government, the better the economy should do. We don't have a free market. That's like a unicorn. I can't wait for one. Oh, it was an incredible buy-in. Yeah, me either. I made a lot of the money I have now from the crash in 2020. I'd love to do that again. There's nothing like having SPX puts that go up 50, 60, 300x, you know. Do you have any data behind your crash fears? Some. Yeah. And no, it's the catalyst is not Zom hitting 130. You discuss entering some GME positions sooner than later while IV is low. Would those be Jan 23 positions? I'm thinking about it. I might mix it up a little, but I'll have to see how options are priced, and I still have some planning to do because this is sooner than I planned. If I'm entering them now, it's sooner than I had initially planned to enter anything. So I will have to modify some of my usual positioning. Didn't you say SPX straddle before 2020 crash was the closest you got to blowing up your port? No, it was the closest I got to blowing up my port was because I started entering put positions on the SPX in December of 2019. And I didn't enter them far enough out. So I had to roll twice before the market crashed. I rolled at the end of January and I rolled again because I was afraid we started rallying. So I rolled again in Feb to June, and I'd almost completely completely gotten rid of all of my available capital. So almost everything I had was tied up in this position that was losing quite a lot of money every day. Um, so yeah, it was the closest I got to blowing out my port, but it was also one of probably the most, outside of GME's January run and February runs, the most money I've ever made on any one position. Like if you look at the 2020 crash, it got pretty fucking scary at the end. Um, like I started buying in to put positions like right around here. And I was buying them pretty far out of the money, like the 2800 and 2700 level, right? And then the fucking market kept rallying. And I was like, oh, this is such a fucking terrible idea. So I rolled out when I got a dip. Um, and then I rolled out again here because it wasn't dropping fast enough. So at this point, I think I had like 10% cash left in my port, and everything else I had was in my SPX positions. Fortunately, obviously these went big money, but I was close to losing it all. Yeah, I shorted due to the COVID hitting the US. So COVID started, cases started being diagnosed in the US. Um, at like end of November, beginning of December in 2019. And I didn't think the US was very well prepared for a pandemic, especially not something. And I've been reading up a lot on the effects of COVID in foreign countries where it had already begun to spread more rapidly. And I didn't think of our, not only did I not think that our, medical system was well set up to handle it. Um, I thought the effect on businesses and the fear it would create would lead to at least a very steep market correction. And I knew, it was highly contagious, easily transmittable, and we didn't have anything to resolve it, right? So it seemed like a really good bet to the downside. As fear picked up in the market, I assumed that the market would take a hit. I didn't think it would. I didn't think it would actually crash. To be fair, but I did think it would take like a big hit. I actually exited a lot of my position on this rally. I closed out about half of what I had. And so I mean I could have made a lot more if I'd stayed in, but I thought this was like the extent of the correction, and I was wrong. It just kept plummeting. Is Gen 50C for Jimmy a decent mid-range strike to capture IV and price action? Not great for capturing price action, a little better at capturing volatility. But it's probably not the worst strike. Are you more careful after coming so close to blowing up your port? No. No, if I have a thesis that I really, really believe in, I'm usually pretty willing to put my money where my mouth is. I did earlier this year going into March OPEX. I was rolling and doubling down on my GME positioning all through January and February. And finally at the end rolled everything out to June and Feb. And then we hit in March. But I mean that position was underwater fucking like high six figures. Do you think the Fed is holding off on widening some of its securities? Yeah, I mean, you can just look at their sell-offs have been very minimal. If you weren't buying 1,000 contracts worth of theta, would Jan 23 GME positions be the best way to play both ETF FTDs and November OPEX? Probably, but the problem you're going to run into there is you're going to be encouraged, probably, to sell them during the ETF FTD period, and the opportunity to buy them back afterwards may not be there, right? So you may just end up repositioning back into them. I'm thinking I'll target the ETF FTDs with shorter term calls, and I'll target November OPEX with longer term calls. I still can't decide if the market goes violently up or down. Liquidity is gone, and long vol could get squeezed. Bond market also looks ready to crash. What to? I mean, you know it's not going to just go up, right? We'll talk about it a bit here in a minute. And then I don't know, an hour or so. I think we need to look at a lot more data. So June 2023 SPX 3K and 2900 Ps. I'm not gonna not buy those. ETF FTDs are 3 through 10th or 4th through 11th, 3rd through 10th. Better to sell far dated deep in the money calls on shares or just exit shares. You could do either one. I mean, taking a loan against your shares is the same same potential risk as just exiting them. The problem is you have to know the bottom of what GME could hit. right? And then you'd want it, well, near the bottom, and then you'd want it to drop below that so you could buy those calls back. Well, any position, right? So like what I plan on doing with AMD, I'm targeting a range of valuation, which I think will be near its low, but like I'm selling covered calls a bit above that because, if AMD falls below that, then I can, buy those covered calls back and have made a huge amount of profit. But I still have my shares. The big boy dad, welcome to Dillionaire. Thank you so much, man. I appreciate it. Hit me up on the Discord. I'll get you added to the country club after the stream. What happened to thinking we don't see a crash due to Feuds still being up and just having endured a crash in 2020? That effect is still there, but I don't know if the mispricing that we're seeing of risk in the market is something that can overcome. Even we may just get like a flash crash. It may not be like a true like crash with a bottom that stabilizes. But we're definitely approaching an inception point far faster than I would have thought even 3 weeks ago. I just read When River Runs Dry. I'm trying to understand how this relates to the timing of an incoming market crash. Thoughts? Read it again? I mean, the thoughts are there. There's no further thoughts. It's a very well-rounded and explanation or self-explanatory DD, right? Like, I don't really have anything to add to it. Not that I want to tell people. If there's blanks that you can't fill in, I think you're not understanding it. Yeah, I'm still going a little bit. Well, people have a lot of questions today, reasonably so. Not the longest hot tub stream yet. One time I did one to like 4 o'clock. I mean, generally I'll stay until people run out of questions, right? So selling a June 23 20C on GME is a decent idea. Yeah, I mean, if we're at a peak or something, I don't think that's an unreasonable price target. Careful though, because positive EPS can change GME's multiple really rapidly. I'm willing to do that with my AMD position. I'm probably not going to do that on my GME position. Did you comment on AMD? I think it'll just continue to move up with everything else. It looks like it's in a good position. Remember, AMD is a big volatility short, so it has some correlation with GME and Upstart and all of that. Not as much, but some. Yep, read it again. If you have questions about it, you need to read it again. I know it's a lot of info. But I think in a very well-rounded way explains everything we're seeing in the market right now, and also everything we've seen on these meme stocks and continue to see on them. I think it's my best DD. GME lowering their SG&A to the point they can achieve positive EPS. Seems like perfect timing for a market crash by first quarter. Would that not cause insane FOMO? Yeah, it very well could. I think GME's positioned well to withstand recessionary pressure, and I mean a crash will devalue it, of course, but not. I don't think for long. I think it'll recover quick. They're very low on debt. They have a revenue stream. If they can cut back their costs, I think they should be trading at a multiple within the next year or so. Thank guys. Welcome to Dillionaire. Thank you so much, man. Do you have When the River Runs Dry as a PDF? No. Should I make white before market open? Probably. You want to be clear-headed. Oh, you'll still be loaded full of tea. If you need more, just we keep Carl's extra in the closet, so. But doesn't it move with the SPY too? Yeah, but you know, you can that can that can change. Gherkin's Law. I don't know what the fuck you're talking about. My calls are still up. That should have been my law. For anyone wondering why I bring up SG&A specifically, is because GME CEO literally said aggressively lowering SG&A was a priority. We all know this, man. We're all well aware that they're prioritizing lowering their capital expenditure. All right, that's enough. I'm going to do other things with the rest of my day. Why hasn't RC not jumped in on Fubo and Upstart? Dude, let's hope he doesn't. How about that? I guess it's not as bad if you're in before him, but I don't think he will. Fubo maybe, because there's some metaverse tie-ins. Gherkin's corollary. If your short positions are down, just buy them back. Yeah. Sometimes you have to take the loss. All right. Thank you guys so much. And I will see you all bright and early tomorrow morning. Don't forget that Pickle's Picks will be out tonight, probably around 11:30, midnight, somewhere around there. I have to go do a big meeting with the quants, so I got the rest of my day pretty tied up. Is the mispricing risk in the market still skewed to be favorable for bulls? Yes. Currently. That doesn't mean it's bullish, but congrats on not losing money today, Tanksimus. All right, guys. Thank you so much. I'll see you tomorrow morning. Have a good night and the rest of your weekend. Later.